We have Kunj Bansal of Centrum Wealth Management who joins in now. Kunj, hi, morning. What's the approach now at the start of the new year? Should retail investors buy at this juncture, or should they wait for some further cues on the reform momentum, etc.?
Yeah, so that's a question which has always been difficult to wonder and answer and pinpoint the exact timing in the market. But I think given the way the market had moved in all the way, especially in the second half of 2014 till November, with the marginal correction in December, which did not happen in mid-caps, especially in last 2-3 days of the calendar year. One can expect that there could be some correction in the let's say next 10-15 days or so, but it won't be a significant correction. So if I were to just try and put some numbers, maybe 3-4% correction in the large cap indices, marginally higher in the individual stocks, and that should be the time to look at getting into the market. I don't think that the market will give a significant downside or a very good correction or a significantly lower entry opportunity for any investors to come in.
Okay, let us take some individual themes that we have been getting over the past few days. There is the banking conclave which kicks off today, and hopefully tomorrow by evening we could get some concrete reforms getting announced. PSU bank stocks have been excited. Will you be excited enough to buy them?
Yeah, I think valuation-wise, clearly that is one space. So we are talking of a market which has risen 30% in the calendar 2014. So while my view overall continues to remain positive, one also has to look at that what can be the themes or stocks or sectors which can give returns from the market in the current circumstances if market continues to go up, which I feel will continue to go up. Now, that is where the valuations will come in. Now, these valuations, especially in case of public sector banks, always tend to and should be get compared with their performance, with the numbers that the banks have been declaring, especially the NPA scenarios. But keeping the two together, public sector banks today are available anywhere in the range of, depending on which banks you choose, price to book forward of 0.5 to 1 time, which is significantly attractive compared to private sector banks, if we take, which are in the range of about 1.5, very few, but 2 to 4 times. So that is one. Secondly, the NPA scenario will improve. If our overall call is that the economy will start improving, then I think the NPA scenario will improve. More importantly, let's also keep in mind the fact that the long pending decision, whether right or wrong, only time will tell, of bifurcating the position of chairman and MD of public sector banks. Finally, the call has been taken by the government. And this conclave, which is there for 2 days, involves right from the Prime Minister, Finance Minister, RBI Governor, bank chairman, public and private, and other dignitaries. So I'm sure they have some serious thought behind it, and any reforms that come out of it will certainly build up interest. And
so you're a buyer in PSU bank stocks?
What about the auto space? What did you make of the auto sales numbers, and are there any stocks that you would continue to buy now?
So numbers have been mixed, or mixed is a softer word, marginally disappointing compared to the expectation that one would have had, or had given the way the sentiment had moved positive over the last few months. We indeed saw some pickup around the festival season in the December quarter, especially in the months of October, November. But the December numbers have been mixed. In fact, they have been marginally lower than expectations. So to that extent, yes, it's and also we have to keep in mind that from 1st January, the higher excise duty on automobiles have become applicable. Now, would that have a further impact on volumes in the month of January and going forward is something to be watched. But as of now, the numbers are looking not encouraging. But any correction as a result which comes in these stocks, I think for a medium to long term, the whole sector remains positive, particularly the commercial vehicle space is what we like.
Okay. Well, the other information we got yesterday from the Coal Secretary Anil Swarup is that there has been a seminal improvement in Coal India's output against a 2-decade performance of 3 to 5% annual growth. This year it's a 10% annual coal output that they might deliver. And this is not just a target. Even in October and November, the core sector numbers showed a 15 and 16% growth in coal output. So it may be delivered. How do you use this information to pick stocks? Is it just Coal India that you will prefer, or is it any of the power stocks? How do you handle this data?
Yeah, so the data is quite positive if I look at the coal sector volumes, and more particularly for the users of coal industry, specifically power. So to that extent, it's quite positive. But let's also keep in mind that irrespective of the Coal India's volume, some of the power sector companies had been procuring their coal requirement by imports. So that is something which will continue, but still, here is a country, India, which is surplus in coal, but unfortunately the production and the domestic consumption hasn't been happening to the extent that it could happen. So to that extent, it's positive. I think going forward, the requirement, if on the pending power plants that have been stuck, either for some of them were for gas availability, which would continue to remain an issue, some of them were in the last stage of completion because of environmental or pollution clearance and things like that. Once those get cleared and they have the assured supply of the raw material, especially the energy, the coal, then that will certainly be positive for the power company. So I think not only the coal volume, I will also club it with the reforms that the new government will continue, especially towards the benefit of power sector, is where a sector such as power sector will become good investment opportunity.
Okay. So you will restrict yourself to the power sector. You won't increase your allocation to, say, some of the infrastructure stocks that could also benefit?
No, not like that. I mean, if we talk of broad themes, there are, of course, 2-3 things which will pan out since we are at the beginning of the new year. Maybe it's good to talk about the year as a whole, but even otherwise, anywhere in the range of, let's say, next 6-8 months to 18-20 months, if we take. The two major themes that we see panning out in this time frame is, one, the cyclical recovery based theme itself. So let's also keep in mind that if economic parameters continue to move the way they have panned out over the last few months, so what I mean by that is if the interest rates continue to go and finally RBI also takes a decision to start reducing interest rates, that will be a big positive for the high capital requiring industries, which again comes back to the infrastructure investment oriented companies. Clubbed with the fact that this time, and rather also at this point of time, if I may talk, that what's the difference between the bullish market of the earlier 2005, 6, 7 and this is the biggest fact that time the commodity prices were high or were continuing to go high. This time the commodity prices have been lower. And as a result, that is a big benefit for the country, India's macroeconomy. So the sectors which are dependent on the commodity prices will also benefit. So which again comes back to the automobiles, although these days the commodity prices both up and down tend to get passed. But still net the lower prices will probably result in higher demand. So to that extent, recovery based stocks as well as the government reforms based stock, and in which a large part of themes will come in. So within infrastructure there will be power, there will be EPC companies. One will have to still take a call on the actual project owners. So what I mean is whether the companies which own ports or roads, will they continue to see improved traffic growth.
Okay. Anything you would sell? I mean, the mid-cap rally actually is stronger than the heavyweight rally. Anuj was just pointing out it is only 1% of its all-time highs, whereas the Nifty is a distance away. Would you want to sell anything today before the cats come back on Monday?
No, I don't think that it's always difficult to give such a short-term view of the market. So first of all, today I don't think market is going to be negative. So to that extent, not a.
It's a good time to sell, isn't it? Especially if you're stuck with some wrong stocks.
Yes. In fact, this is the discussion that we had in the last 3 days of the calendar year as well, that there were a lot of support or movement to some of these stocks, which could be because of various reasons and vested interests. So it was a very good time. So leaving aside today, if I were to say that, okay, what are the themes or spaces or sectors where we would be underweight or we would not have as bullish a call, comprises real estate. So that's one pack wherein we feel that one can still stay away or have a lesser weightage or maybe no weightage also. Extending that is telecom is another space which we have seen clearly underperforming. We think will continue to underperform for some time. And another addition which might be contrary to general people's market expectation is oil and gas space. So we have seen some returns coming in. The whole sector largely comprises public sector companies. We have seen some, not some, in fact quite a good returns coming in this space in last year. So that is somewhere we feel possibly may not follow up with returns going forward.
This week Aban is up 23%, IVRCL is up 19%, Suzlon is up 11%. Anuj was just speaking about that to us.
Sure.
These are all heavy debt companies. And such big gains, 23%.
Yeah, so as I said, one of course the fact that heavy debt companies will clearly be beneficiaries of the falling interest rates if that happens. We have already seen the yields in the secondary market coming down in last few months, and I am sure if the inflation continues to remain lower levels,
so you will remain positive on these stocks.
So today I don't have compliance clearance to talk on stocks, so maybe next visit I'll talk about the stocks. But as a theme, I said the companies which have not necessarily these, but as a sector and as companies which have higher capital in their balance sheet will continue to benefit, and also the fact that some of these stocks could have been, have seen the year-end support from the respective shareholders. So I would like myself and others to be cautious about that fact.
Fair enough. We leave it at that, and we hope next time we will get more specific stock ideas from you, Kunj.